Sandeep Tandon, founder and CIO of Quant Capital, is with us. Sandeep, great to have you back on NDTV Profit. Always a pleasure to speak with you here. And, at an important time when there is so much uncertainty out there. Now, between all the variety of views that it will get better, there will be negotiations on tariffs, India will be relatively better off, wondering which end of the spectrum you are on, because one end is also saying this is just gloom, doom, and more doom.
Yeah, I tell you, the way I look at this thing, this is a more of a negotiating tactics which Trump is playing, and we have to understand that there is no point getting paranoid about it and unnecessarily getting capitulated at the bottom of the cycle. So we are not that negative the way prices sometimes indicate. So we have to understand the difference between narrative and the reality. Okay. Now, the way I will read it, obviously, the one round of announcement is done. So worst is behind us. Now, if you really sit down and analyze the statement or foresee what it talks about very clearly, this is the announcement. Once you start talking about bilateral thing, it can come down. So there are certain conditions. And if I can also say that India is one country who has already taken the lead. Okay, India was the first country to visit to US. Okay, and last week, if I'm not wrong, the delegation was very much in Delhi, and we are in advanced stage of negotiation. So I think as a country, we think we have taken right steps. Okay, and ultimately, US is a large economy, and we have to sort out whatever the challenges we are facing. I think I'm optimistic. This is the worst case scenario outcome we have seen. From here. It can only improve. So no point getting capitulated at this point in time. In fact, India actually behaved quite well as compared to global market yesterday. It showcased that India could be a hiding space as compared to what the turmoil you are seeing in the global market. And we also don't have to forget that India is a very large domestic-driven economy. So our impact will be relatively less. And I always say, look at not only an absolute basis, absolutes are important, but relatives are more important. So relative to other markets, the tariff differential, we are beneficiaries. So I think it's a great buying opportunity in a sector which you like, rather than getting too nervous about it at this point of time.
You've led me beautifully to the next point, the sector which you like. Sandeep, to hear from you that this is a time to go out and buy, this is a buying opportunity, heartening when there's so much gloom and doom out there. Would you stick to the tried and tested financials, or you see more space than sectors like auto consumption?
See, I think obviously consumption broadly is a very broad sector, is the biggest beneficiary in the budget. So consumption theme should play out very well from a longer term perspective. Then in the current environment, our focus is more from a domestic economy, large infrastructure space. Okay, if you really look at even the NBFC, given the interest rate pressure which can come down. So I think the way you look at the domestic company, insurance sectors, so in my hospitality space, even we like pharma, despite some narrative is floating around today. I think is a great sector because cost of production of generic drugs in the US will be few times what you do it out here. So far exemption we have seen, but even some tariff comes, I think Indian companies are in the position to pass immediately. So I think we have to wait and watch rather than just reacting on some interviews or some noise which is floating in the market. I think it's a great opportunity. As long you have earning visibility, whether it's from the domestic perspective or from global perspective, I think, and valuations are attractive, I'll be all in such names.
Sandeep, good morning, Neeraj here. Now,
Yeah, Neeraj.
Could it well happen, Sandeep, that the index stays in a consolidation period because of the uncertainty and not necessarily actual moves happening? There could be negotiations, etc. And therefore, individual pockets of strength and weakness would arise. The way IT is correcting so much, despite the fact that the Nifty is largely well behaved, as you said.
So I'm not ruling out that also, but what I'm saying this year is obviously we said that second half will be better than first half, and within first quarter will be worse and second quarter will be slightly better. So with that background, I will say yes, we have seen last 4 years has been extraordinary, and we have been saying that easy phase of bull run is over. But we are still in bull run, but we are in difficult phase of bull run. And to tackle a difficult phase of bull run, your strategy has to be different. It has to be significantly different than what we all did in last 4 years. So that I think the first thing, the mindset has to change. This I have been highlighting for last many quarters now, saying that the biggest risk in India is that our own expectation risk, because we have built so much expectation in last few years. The benchmark has changed. Once you bring down your expectation, then you will find opportunity. When you go back and look for 12-15% opportunity, you will get. The problem is that when you have 40, 50, 80% expectation and you are unable to fulfill, the frustration comes in. And there's the same, markets are not performing. But from the current level, I will look for a buying opportunity in select name, and there are enough opportunity available. We have to just be slightly patient and bring down our expectation. I think end of the day, you will be very happy.
Got it. Sandeep, the other question is, I mean, and I think, if I'm not wrong, I heard you say that you will probably prefer domestic cyclicals as opposed to globally exposed firms. Now, the thing is, I mean, I'm just trying to understand, if there is a very large dip that comes into some of these globally exposed firms at a point of time when we are saying that there are going to be negotiations, Donald Trump himself has said that he's open for negotiations if there are out there, right? Could some of the way the dip in the last 4 months gave an opportunity in the month of March, right? Could some of these give an opportunity? There is some incessant punishment being meted out to autos, to IT, etc. Or would you rather not veer down that path right now?
No, the Dheeraj is that if clarity emerges, let's say in 6 months' time, 2 weeks' time, 3 weeks' time, we don't know the timeline,
Sure,
but I
okay.
expect that in next 1 quarter, it has to settle. So, okay, this cannot go for a long period of time. So you have to look at from Trump perspective, his term has just started. He will also like to settle everything in 1 or 2 quarters so that remaining 3.5 years will be better for him in terms of managing everything. And that's the way I read it. So if we do get a clarity that this sort of tariff has going to come down, or these are sector will be exempt, or these are the new revised tariff downwards, I think we will get opportunity. And by the time you will see capitulative move, like we were very early to talk about in the month of January that we have cut down our auto exposure, or even we don't have IT exposure with very hardly any names we have. So the background was very clear. We were looking at the US market correction. I had said very vocally that we expect 15-20% correction in the NASDAQ. Okay, if that is the case, then how you play? Better to move out from such names. But now they have corrected meaningfully. I'm not saying they are close to a bottoming characteristic, which we typically look at. But one day, if it emerges, I think I will buy it. We don't have any love or hate relationship with any stocks. Okay, when we felt it was not appropriate time, we moved out. And if some buying opportunity come and we really see the capitulative move happening in auto or IT, I will be the first buyer.
What about pharma? I'm just going to, Sandeep, what President Trump has said. Trump has said pharma will come at a level you haven't seen before. I'm quoting here. He says pharma is a separate category. We'll announce tariffs on pharma sometime in the near future. Pharma tariffs are under review right now. So now 2 things with this, Sandeep. One is the unpredictability of this whole situation. As of yesterday, pharma was the relief sector, right? Because it had been skipped for tariffs. Now you have Trump coming and saying that pharma is under review and you'll see tariffs like never before. And you're seeing, of course, the stocks also react quite sharply. This is the problem with picking sectors. Would it be safer to choose companies which are domestic facing?
No, I agree. But see, we also have to understand the Trump's compulsion also. Okay, making statement is very easy. Okay, do they have resources? Look at the COVID time, what happened. Special emphasis was given on the pharma side. Where is the competition when it comes to pharma from India perspective? Hardly anybody. They will not take anything from China. Is there anywhere else for generic apart from Europe where they do have some formulation and certain specific thing? But apart from Europe, nothing is there. So I think US is heavily dependent on India as far as generic is concerned. And we have to keep in mind, you cannot just ignore. And they have their own insurance bills will go. See, ultimately, if prices moves away, tariff come, let's say hypothetical example, I expect at least 10% because that's the way sectoral thing and reciprocal tariff is around 10%. The 10% can be reality. But can this 10% can be passed by the domestic guys? Answer is yes. Okay, they can easily pass it. Now the challenge will come for US because ultimately neither US company will absorb, not even the insurance company will absorb these costs. So ultimately, it will pass to the consumer, and that will pain a lot to the American citizen. And I think Mr. Trump is aware of these. I will still say these are all uh, techniques to settle down the matter. It's a tough bargainer. He will shake you so much that you will come on the table and settle something. So I think it's a part of a narrative. I will not read too much into it unless it happens.
Would you buy pharma then? Because the point you made was interesting, Sandeep. That what will they do? What is the alternative? Even if you want to start manufacturing in America, it's going to take some time. You can't disrupt supply
It will
chains for
take
something like for pharma.
It will take 3-4 years to manufacture, and B, it will 3 to 4 times the cost what you get from India. So it does not make sense, and nobody will set up a plant for 4 years his term, because we don't know what will happen in the next tenure, or who will come and change it. So I don't think talking about setting a plant, manufacturing in America is a great thesis, but it is not pragmatic to implement these imagination.
You buy then? No, I mean, no stock specific, but I'm just in a directional sense.
Answer is yes. Answer is yes, because earnings are there. So it's not like we have to worry about it. So we have seen, if you recollect now, something similar is getting like COVID sort of scenario happen. There was a steep vertical fall, and then we have seen in subsequent month a sharp rally, and people were not able to participate in that. So when opportunity comes, people become skeptical. And as a house, we think this is a great opportunity. Wherever you have earning visibility and valuations are cheap, I don't think we need to worry too much about it. The problem will only start when your valuations are very much stretched, they're grossly overowned stocks, and earning visibility is in the question mark. Those are the companies or the stocks which we have to avoid.
Filter, very clear filter to look at, and that's an important guideline there coming from Sandeep Tandon. Thank you so much for your time, Sandeep. Always a pleasure.
Yeah, thank you.